Hey, Bulls and Bears, how we doing? Hope everyone is doing well. Back with another dose of economic reality. All right, Bulls and Bears, let's get into the topic today at hand, which is a topic that's pretty consistent here on this channel, and that is what's happening in reality. That's why I always talk about economic reality versus what's being put out there through the big media networks and the mainstream business channels. The narrative out there is that the economy's strong. We've heard that phrase over and over again. We've heard another phrase, the consumer's strong, the economy's strong, the consumer's resilient, that we're in an economic recovery. That's another one. You guys remember talking about that one. There's a recovery going on right now. Folks, the recovery is the average person, the average working person, middle class person, getting further and further and further into debt. That's the recovery that they're talking about. Of course, that's a recovery for certain people. When people are spending more money and taking on debt, there are people that benefit from that. Certain people get rich off of that. Banks make money off of that. But that's another deception. Are banks making money? Well, look at this recent article here. Bank of America, unrealized losses on its securities over $131 billion. But yet they're going to talk about the profits that they made in the quarter. What were the profits just this last quarter here? Got it right here. Latest earnings, Bank of America, $7.8 billion, but $131 billion unrealized losses on their securities, right? So they gave out all these loans at ultra low interest rates. Now the buyer that used to be there is not there because why? They need to shed their balance sheet because there's a fight against inflation. Folks, these banks are insolvent in more ways than one. It's not just the unrealized losses. It's the issuance of loans and currency that they don't have because the money is not backed by anything. At this point, it's just digits on a screen. That's what the currency is at this point. It's digits on a screen. That's why myself and many others out here in alternative media land have been urging people to look at stacking. And I say keep stacking. Stack silver is still the thing that I talk about. Now, there's certain channels out there saying that we're never going to go back to a sound system of money, that we're never going to have silver or gold. So now we have these creators out there, influencers, whatever you want to call them, telling you to buy silver, but yet at the same time saying silver is never going to come back as currency. So ask yourself, does that make much sense? It doesn't make much sense when you think about it. Think about it. If it's never going to come back as currency, why accumulate silver? Why stack silver? Well, some people will say, well, it's a hedge against inflation. Sure, yeah, I'll give you that argument. It's a decent hedge against inflation. But do you think the price is not being tamped down by fake money, right? So they're printing fake money on a digital screen to naked short the price of silver. They're shorting and beating down the price of silver on the paper market, on the derivatives market, using contracts, using fake money. You see what I'm saying here? So if we go back to real money, one, you're going to see the price of silver skyrocket because it needs to go back to norms or historical norms to keep up with inflation. But at the same time, you would see inflation come down drastically because the purchasing power would be reduced by a tremendous amount because you can't just create all this money, creating all this artificial demand for goods and products and services, right? So you'd see two things happen. The price of silver and gold skyrocket even higher. Some people say it's already high. It would actually go even higher, especially silver, because silver has really been tamped down. Both manipulated, both shorted into oblivion. We've showed you the evidence here dozens of times, probably hundreds of times throughout the years. So most of you, I think, know this, but I don't think many people are putting the pieces together. They're not connecting the dots fully, right? So we're going back to sound money. Could still be a while. Could be a few years. The reason they're tightening and raising interest rates is because, one, they want to protect the dollar. Because think about it. If we lose trust in the dollar, if the people lose trust in the dollar, will they trust the next digital currency that they're going to try to bring out and get everyone to adopt? Probably not. So they've got to protect the dollar with these higher rates. But see, that's causing consumers to really get buried under debt and backing a lot of people into a corner. I just saw another statistic here today. Let me bring this up here. Delinquency rate on credit cards. Well, we have now surpassed the pre-pandemic levels. Um, and this is the highest that we've seen going all the way back to 2000. I'll give you the exact quarter here. Third quarter 2012 for delinquency rate on credit cards. Not good. Over 10 years, over a 10-year high. Just surpassing the pre-pandemic number because it was surging up. Remember, going into 2020, debt was a big problem. 2020, everything got turned upside down and inside out. Well, the stimulus checks are done. And now delinquencies are surging again. What's going to rescue people this time? Ask yourself that. So some people say we're on the verge of something really big happening with these wars. That's not good news there. I'll dip into that here for just a minute. We now have people injured, U.S. people, U.S. troops injured with the conflicts happening over there, the latest one being in Israel. And remember, just a couple weeks ago, it was said that we were sending thousands of troops over there, but in a non-combative role. Well, was it non-combative if you're getting injured? What's the report here? Politico. And there's more. This is just one. 19 troops diagnosed with traumatic brain injuries following attacks in Iraq and Syria. Right? So this is escalating as we said it would. And the things that were reported initially that these were non-combative roles, well, it doesn't look to be that way, does it? All right. So use your head, folks, and get ready for what's coming. Continue to stack. I always say not always, but every few episodes, I try to remind people of that because, yes, we're going back to sound money. How long exactly until we get there? I don't think anybody knows. And also look at the stock market. People think the stock market is strong because it's not crashing. When, let's just look at an index here. S&P 500 down 50 points today, by the way, here on Thursday, October 26th. You're still underwater on the broader index. Now, there's single stocks. Some are up, some are down. But overall, if you would just bought the index, if you would have bought a fund or ETF tied to this index, you're underwater by a good amount. I think the highs are behind us. And the big money that controls this, the top 10%, the institutions, the investment firms, the billionaires, they'll bring it down when they're ready to bring it down. And I think there's going to be a nice excuse to bring it down here when you see these global conflicts unfolding, right? So I think we're not going to make it out of 2023 without something huge happening in the markets with the economy as a whole. Just think 2020 2.0. It might not be a sickness, but it's going to be something else. It could be instead of a real virus or human transmitted virus, it could be something cyber, right? A big cyber event, a virus attack, right? So that's what I'm ready for here. Have money out of the system, have food, water, and essentials out of the system and cash as well for at least enough to last you 30 days. That's what I'm doing. And real quick, let me give you one more thing before I head out here today. And this is out of Reuters. Most economists have revised their forecast and now believe the Fed can engineer a soft landing. Believe that, a soft landing for the economy, citing expectations that July-September period will show a continuation of second quarter strength in worker productivity. A soft landing. These are the things we hear before things really take a drastic turn to the south, a drastic downturn. I'm not saying it's going to happen tomorrow, but folks, something big this way comes, and we're lucky to get out of 2023 without a complete, I think, world-changing event or events. We'll have to see. But everybody, stay diligent. Keep stacking as always. Thanks for watching this report. Bye for now. Peace.